As investors are concerned over grim German manufacturing data, Goldman Sachs says there is a silver lining here, as the PMI data is an outlier among its European counterparts. Joining us now, JPMorgan's global market strategist, Gabriela Santos. Great to see you.
You as well.
My question to you, what's your take on this data and what's happening in the markets right now?
So really interesting development over 2018 was this downshift in global growth. We got into the year growing close to 4% at a global level and finished the year much closer to 2.5%. So clear downshift. I think for now that story is well known. It's been absorbed. So now the question for investors is, where do we go from here? Do we stabilize at these levels? Do we accelerate, or do things get even worse? Now, what we think the market is priced in for at the moment, and what we agree with, is that we're going to stabilize at these tepid levels. So that can still suggest moderate but positive earnings growth and a good return environment for both equities and credit.
Okay, Mark Mobius was on the show before, and he talked about the markets, right now in general. He talked about growth slowing a little bit being a concern, but he also talked about, the rest of 2019, and he said this IPO shift, sort of some of the capital shifting to these big names could cause the markets to sputter a little bit. What do you think?
So I think the question is, we had a lot of support for markets in terms of buybacks, right? You were taking supply out of the market and helping to prop up prices, and now we're talking about IPO or more supply of shares into the market. I think where you shake out is there's still plenty of buyback support. Maybe you sputter a little bit with some extra support, but ultimately it does come back to this conversation about global growth. Beyond the hiccups on a day-to-day basis, that's really what's going to set the path here for the next 9 months out of the year. We need to see that stability we're looking for and priced for.
Speaking of the hiccups, today's a great example, right? You get the Mueller report. The president is saying that he's exonerated, despite the fact that, there could be continued fallout from this. But you see the market trading lower on worries about global growth, and it's sort of this catchphrase that we toss around all the time. But it does move the market. And so should investors be poised for the rest of the year to sort of see this hiccupy seesaw market continue?
I think so, and we really did the, shall we say, first part of the trip, which was unwinding that extreme pessimism from late last year. So now we're fairly valued for this stability scenario that we were describing. So we need confirmation that that's actually happening.
Yeah.
So we need to see that in the data. We need to see it from China. We need to see it from Europe and the US. And I think you're unlikely to see it in the first quarter figures. It's going to be a little bit messy still. The bigger confirmation is probably going to come in the second quarter and the second half of the year. So a little choppy until we get that confirmation.
Well, here's what I would say. Seasonally speaking, the first quarter can be a little slow. And so even if it is choppy in the first quarter, but not too bad, then investors would have something positive to look forward to.
Exactly. And that's why forward-looking surveys like the PMIs are so important, because we do know the first quarter is going to be weak. We're probably going to see that eventually when first quarter GDP is released. But let's start looking through some forward-looking indicators, right? What's March going to say when the PMIs are released for the full month? So some of those forward-looking indicators are good places to look in terms of thinking where we'll be in the second quarter.
Sorry, go ahead.
And stability is the name of the game. We're not expecting any sort of big acceleration. Just stability, I think, would be good confirmation.
And that actually brings me to my next point, because Jerome Powell and the Fed have also said that they're exercising patience, and it appears that they're towing the line in terms of stable policy right now, not moving interest rates around. Do you think that is, will last, and it will be something that drives the market a little bit as well?
It was definitely a very, very big shift, and really what allowed us to move from that extreme pessimism and start betting on stability. One of the most important variables was that Fed pause. It really helps to buy us a little bit more breathing room in this expansion in the US, and it helps stabilize emerging markets. So it really leads credence to this idea of stability. The Fed was really, really crucial. One of the 3 crucial points, in addition to trade, as well as China fiscal policy.
All right, great to see you, Gabriela.
You as well. Thank you.
Thanks for dropping by in our new studio.
Beautiful.
Gorgeous,
I love it.
Amazing. All right.